as the U.S. is rapidly approaching a government shutdown. And keep in mind, that's even separate from the whole debt ceiling debacle because they have to pass a funding agreement before the fiscal calendar starts at the beginning of the year, which would be Friday. And as I'm sure many of you are aware, silver having a tough morning. Well, hello there, my friends. Chris Marcus here with you live in Mexico, silver capital of the world, to dig into the wild events happening in the financial markets as the U.S. is rapidly approaching a government shutdown. And keep in mind, that's even separate from the whole debt ceiling debacle because they have to pass a funding agreement before the fiscal calendar starts at the beginning of the year, which would be Friday. And as I'm sure many of you are aware, silver having a tough morning. Oh, silver's actually doing fine. Silver is still silver. It's the paper price of silver, once again, that is lower, but I'll check. Those are still pesos. Yes, here we go. This beautiful ounce of silver is still silver. So it's really just the volatility in the dollar that we are seeing at play here once again. And we will dig into that. Also, to help put this in context, because, all right, we've seen this happen over and over again. When does it end? What does this mean? What is a more helpful perspective? At least I'll share my own rather than just being angry or frustrated about it. Because I think there are some similarities to the last chapter of the Big Silver Short, which was also a video called The Silver Manipulation Smoking Gun, which talks about how silver got pummeled from 21 to 9 back in 2008, as silver was getting extremely hard to find and dealers almost went out of business because they had no product. But before we get into that, quick thank you to Arcana Silver Corporation, one of the companies that is actually finding a way to go out and dig silver out of the ground, about to go into production in their Virginius mine in Ouray, Colorado. And especially if the current market levels kept up, where the prices of many of the input costs are being inflated quite significantly with the Fed's money supply that everyone aside from Ben Bernanke and Jerome Powell can tell is directly impacting the rise in prices, which means that under the current pricing, you're going to have less silver supply coming up. So thank you to Arcana, A, for bringing us this episode, B, for figuring out how to navigate those hoops, and then C, getting back to this. All right, well, we've seen the markets get hammered, or silver get hammered in the face of what would seemingly be the ideal conditions to have silver. Yet going back to what I mentioned earlier about the silver manipulation smoking gun here, this came about after I had interviewed Bart Chilton, where he described in detail how JP Morgan did take over the Bear Stearns silver position. It was over the limit. In fact, it was so far over the limit, he mentioned the combined position. He was stunned. He gave them a temporary waiver to reduce it. The deal was in March. And he said over the next couple of months, they came back, they had made it even bigger. And here you can see the price chart. Yep, there's the silver price chart. You see, while JP Morgan is increasing the size of the position, they were given direct authorization to decrease. Silver drops from 21 to 9. Here's Lehman Brothers spike collapses right around that portion there. But the thing that's interesting is if you read Andy Schechtman's chapter of the Big Silver Short book, or you don't even have to read his, you can talk to other dealers, there was a shortage of physical silver. So at the same time, the price is plummeting, which would typically indicate, there's just supply everywhere. Andy, and I quoted other dealers in the book, talk about how you couldn't find silver anywhere. The European network was down. And when the US Mint finally came back online, silver price is about $9 on the COMEX, yet they say to the dealers, here's your Silver Eagles for $17.50. Go charge your markup after that. Of course, that was in 2008. Things collapsed. Money printing came about. And a couple of years later, silver was touching almost at $50 for the second time. And I think that's pretty much what we're seeing here, because this is a great example of conditional probability. mean, maybe you think these guys are going to get their act together, that Chuck Schumer, Nancy Pelosi, and Jerome Powell can solve this. That's if Jerome Powell can keep himself out of jail, because keep in mind, his whole office is being investigated for front running the world's reserve currency. I mean, that's not just treason to the country, that's treason to the entire planet. Now, hopefully Jerome was not involved in that, but we'll just wait and see. CNBC doesn't always report things on the same day, as I've been noticing with the time lag. So I think it's similar to that, where a lot of these guys know what's coming, which date we will see the paper silver price move. Apparently, so far, not yet today, although I see it as a binary thing, kind of like Enron, or actually even better, Bernie Madoff, where once people find out, it moves almost infinitely, immediately. That's actually one last interesting note. If we go back to the, if I can pull up that silver chart again here, I had read a couple books about Bernie Madoff as well. And interestingly, the silver price starts to rebound from $9 in 2008, or it might have been 2009. I don't know, I think it was 2008. It was almost to the day that Bernie Madoff turned himself in. Again, his sole banker was JP Morgan. Do I think Bernie Madoff was hammering bids on the COMEX? No. Although after doing some research, if you told me he was a money launderer for deep state criminals and he knew about silver, either case, right after he turned himself in, that's when the silver price started to rise. And again, you see the inverse here, because if they know the government is out of money, I think everything that Nancy Pelosi, or well, her too, but Janet Yellen is saying, they're lying specifically to get you to believe something so they can hammer more, have Goldman Sachs hammer more bids on the COMEX while they are buying silver and gold as much as they can. You've seen those World Bank gold reports that have come out with how much gold they're buying. I have anecdotal reports that some big time household political names have actually been buying physical silver. And one other thing, I'll be careful about how I phrase this one, because, well, this isn't verified. I don't know what verified means. You could go on the trading floor and get a couple different answers, but, well, what is verified is Ross Benham saying that they tamped down the price at $30, which avoided a much more severe catastrophe. LBMA said that they were weeks away from running out of metal. And I've heard through the Arcadian grapevine that the same type of unwell and generally people needing help that would participate in doing something like this to their own people and brothers and sisters, that would still be delusional enough to cap the silver price, even ahead of a bankruptcy of the country, that to them, maybe they see 20 as the new 30. Keep in mind, even with JP Morgan's London whale, sometimes when you try and think you're bigger than the market or God, you don't always get what you want. What we can see so far here on the Fitco chart is that silver has gone below $22. So at the same time, I guess I wouldn't bet the farm that they don't get it down to 20. What happens if they get it to 20? Even if they did, yeah, now this is clearly not legal licensed financial advice, but at least the way that I've been positioning myself, it feels as if the shot clock is down to a couple seconds on this. Who knows? Maybe they figure out how to cover up those Arizona audit reports for the election a little bit longer. I always reserve the possibility that things can go on longer than I've thought. I think most of the people in the silver world who've been doing this for a couple of years, I speak for myself, back in 2011, if you had told me this silver was $20 in 2021, I'm not sure I could have possibly believed that. So I factor that in. Yet you got this whopper. Government shutdown deadline approaches. Lawmakers will have to separately raise U.S. debt ceiling before October 18th. So as this one details, there's two separate issues here. And you see one deadline on October 1st for the funding bill and the start of the new calendar. And then Janet Yellen claims she'll make it to October 18th now. As you know, I don't feel she always gives you the truth straight. I would watch that window between October 1st and October 15th. Who knows what will happen by October 18th, but you know, you read all these distractions in the end. Well, they haven't resolved it now. Doesn't seem like Democrats and Republicans like each other even more now. Now, if you told me this was all scripted just to get people to sell their stocks or buy stocks or somehow pick them off with Goldman and JP, I could believe that. But as we will see here, I think in one of these other articles was talking about, it might have been Janet Yellen even, who was saying that back in 2011, you got days within not being able to pay out Social Security. S&P downgraded the U.S. It was not an outright overt default, but that still sent gold soaring from 1,600 to 1,900. And on September 22nd, which is 1 week ago, today is the 29th, 6 former U.S. Treasury secretaries sent a letter saying even the appearance that it could get to the deadline, you know, could be a catastrophe. Janet Yellen was selling Calamity last night, so we'll see how that goes. And I wish I knew when the paper silver price would rise more overtly, but again, I see it. At least what helps me sleep at night is that I can take the emotionality out of it. Let's say silver is 20 bucks for the next year. I don't think that's going to happen, but let's say that it was. Well, I'm fortunate right now that I'm earning income through my business. We're expanding and growing. I got some nice responses to our hiring, so I look forward to adding some people onto the team. Looking for some great video makers. I'm sure you guys have seen me say it long enough. So anyway, with that said, you know, if I have income coming in and I could sit here for the next year and buy physical silver and mining shares, you know, if the thing was reset a year from then, that would have been great in hindsight. In fact, you know, as you all heard me say, I thought this thing really did break underneath the scenes back in February, and it's been a cover up ever since, shifting things around like Janet Yellen with the debt ceiling. I stand by that. I mean, the paper price has not moved upward yet, although ever since then, I would just several times, I don't know, maybe 4 or 5 different times over those last couple months, just when we had money come in, just get anything from the online dealers or from Andy Scheckman, and just wondering if these things would be available. And who knows, maybe they'll always be available in some sense, but and I can't say that that was right or necessarily that that was right for you. Just if you see where this is headed in the long term, and then what I find is helpful is to check my emotions in the long term. I have a note on one of my notebooks that let go of what I hope to happen, and you can have that too, but think about what do I expect to happen, and at least base your trading around that. So I expect that at some point silver is not going to be just 50 or 100 bucks. When this stuff comes down, the paper price, in my opinion, will be substantially higher than either of those numbers when you have the full overt default. And it's coming. Is it going to come in the next 30 days? I don't know. Is there certainly possible? Sure. But if you hit the subscribe button and the notification bell, you can stay posted. That's pretty smooth, yeah? A few other interesting things before we wrap up here today. Again, here's the chart. So I was talking about last crisis. Here's 2007. It's floating around. Then this is when the credit markets started freezing up. See, silver rallies up to 16, then rallies up to 21. Here's the Bear Stearns JP Morgan deal. And then a couple months later, after Lehman collapses, at $9. And then I believe it actually might have been the 10th, December 10th, when Bernie Madoff turned himself in. So interesting data point. Here you also see some of these silver ETFs. Notice this, 4-week change, 5 million out of the COMEX, 9.3 million out of fraudulent SLV iShares. Maybe people heard how they treat their customers when they ask for an explanation of how the pricing on that works. 8 million going into Deutsche Bank's trust, who also was arrested and convicted. Or I don't know if they were technically convicted, but their trader transcripts were conviction in my mind. Some metal going into there. What exactly that means, I don't know. Maybe people aren't trusting London silver so much with good reason. Also interesting, here we see that silver short position by the banks continues to decrease substantially. Let's say about here we're June 28th when you have Basel III. This is the commercial short position. So here they're short about, let's call it 70,000 contracts. Then you see this to the shortest in quite a while since, yeah, look at that, July, right before July of 2020, last year when silver hit $29. So that is the theme. As you see, there was the spike. Oh, no, maybe I had it was off the year. This was July of 2019, so it started rising. But anyway, getting a little shorter. Another look at that here, the red line. You can see here commercials. They're short 28,000 contracts now. Now, if you look in that yellow box there, about halfway in the middle with C in the parentheses, you see COTLC, C in the parentheses, negative 28,000 contracts. And back in July, that was, as you see, 71,000. So short position is being reduced. That to me is a good sign. And just before we wrap up, this article on Sunday, I believe it was, so wild. Jerome Powell and the debt limit standoff could force the Fed to revisit the playbook that Ben Bernanke wrote. That's always good. Oh, yeah, here you go. In 2011, Standard & Poor's downgraded U.S. credit rating first time ever after the Treasury came within days of being unable to pay certain benefits such as Social Security. 2013, the government shut down for 16 days. And knowing how much money they're spending and how big a percentage of GDP and employment that is, it'll be interesting to see how the CPI can doctor those numbers, but it gets better. According to this was all, both times, Fed policymakers debated behind closed doors, of course, so they can front run it, what they would do if the gridlock led to government defaulting, according to transcripts released with the usual 5-year lag. Isn't that helpful? Here's another thing. Others sharing the view that of Mrs. Yellen, which was, I wouldn't be eager to do these things, but I wouldn't say never. Oh, there's Eric Rosengren, hedge fund genius when he front runs the Fed's own policy. But that, you know, the public can't have for 5 years until 5 years later. Powell, who oversaw debt management policy, is a top Treasury Department official in the 90s. So Powell was in the Treasury. And then as an unpaid analyst at a Washington think tank called the Bipartisan Policy Center, Powell modeled government cash flows to produce a so-called X date, after which the Treasury would run out of money to pay the bills as they came due. And their X date currently falls between October 15th and November 4th. Although here's interesting. This is talking about this Friday, October 1st. Friday could be a particularly difficult date for federal finances, he said, because of a large payment owed to a trust fund for veteran retirement payments. Financial and economic risk could accelerate from that point, he wrote. Wondering why Jerome Powell did not mention that specifically. Or I guess they did say that the Congress can't agree on these spending plans for money that's already spent, which means if they just don't agree, they're already in default. In 2013, Ben Bernanke convened a conference call for officials to review potential options as the Treasury Department neared the exhaustion of its emergency borrowing authority. I can see why they don't tell you these things until 5 years later, or even if they do, put it in some place no one will see. Bernanke warned the Fed wouldn't be able to remove defaulted securities from the market in any comprehensive way given the size of the Treasury market. They also agreed to steps that could flood lending markets with cash, included by expanding very short-term loans made between financial institutions called repurchase agreements. Well, they've already been doing that. And we've seen records in the repo amounts almost on a daily basis again. Reminds me of how the money market funds really did collapse back then. You heard Paul Kanjorski saying the financial system was within hours of collapsing. It sounds we could be days away from that again. Many officials expressed concern markets could face severe disruption even before the Treasury stopped paying all of its bills if the government failed to find enough buyers in an auction Treasury debt. Heard the 2-year didn't go so well the other day. Powell pointed to the risk of a failure of the Treasury to sell short-term bills would mature at a point where the government's borrowing authority might be exhausted. The real risk is a failed auction, loss of market access at any price. Well, if you've checked the bond yields lately, I think we're pretty much there. Mr. Powell worried that the ideas with broadest support were ineffective. I don't want to say today that I would and wouldn't do if we actually deal with the catastrophe. Now, you would think someone that's the Federal Reserve chairman could see the debts growing exponentially and realize that this was eventually going to have to happen. Maybe that's why he called Ben. Ben said only Congress could fully resolve any impasse. What we're talking about are the steps that the Federal Reserve could take to mitigate on the margin potential effect of such a fall. But obviously, this is not a problem that we could eliminate by any means, but he will stand ready to offer his advice, print more money. And we'll see if any of them have any comment on silver soon. It's now down 95 cents, 4.23% on the day. And that is your news. So I was buying equity call options, AGQs, some AGs. I mean, to me, it's nice because I'm either massively wrong or massively right. I can stay in the game long enough. And that's why, again, the option trading, I only do that because that's my background. But I mean, if you have silver and it's sitting there, at least from my perspective, what you're seeing here is not indicative of the value of silver, but the fear and panic on Wall Street right now. So either case, with that said, I'm going to wrap up here for today. Hopefully you found this one helpful and entertaining. So go ahead, hit that subscribe button and hit the share button too if you think other people are being blinded by CNBC Stasi-like propaganda. And to make things easier, really set the stage and put this into context. That video about the silver manipulation smoking gun,